Folks, we have some breaking news today. We have the October housing data in, and I've compiled it, and I may have been wrong.
You're such a clickbaiter. You're just trying to sell your course.
Yeah, nice hat. Happy Halloween, man. Happy Halloween to everybody. You know, a clickbait is not actionable, accurate advice like this is. And yeah, I have a course, but that's just taking this information and applying it and bringing your investing career to the next level. But let's get into this data. Folks, this time we are expanding the data we're looking at. We're looking at Orange County, Los Angeles County, and Ventura County. And yes, this is being recorded on Halloween, which means sale data for October 31st is not included in this. And the bottom line is, when sales close at the end of the month, they usually take about 3 to 4 business days to actually show up as recorded sales data, because people go leave their office and celebrate Halloween. And really, I don't actually expect October 31st data to be available until maybe next week. So rather than leave you waiting, we're going to apply the law of large numbers, which basically says that once we have medians, we're not really expecting the data to change much, if anything at all, by adding another half day's worth of data. So here we go. 2 very important things. 1, we looked at October over October. That is October 2017 to October 2018. I'm going to give you that data and draw some conclusions. But in addition to that, we're going to look at August of 2018, compare that to October 2018, and figure out exactly what's going on so we can see the inflection points and the trends. So anyway, here's the October housing data.
Dude, that's lame, man. All you need to do is look at how many price reductions there are, look at the sales prices going down, and when the market crashes, I'm gonna be sitting right here. That's when my boat's gonna come in and I'm gonna make a killing. You're gonna be the one missing out. Ha!
Year over year, sales volume in Ventura County declined 3.14%.
3.14.
9.65% down in Los Angeles County, and 11.51% down in Orange County. Across the board, sales volume is in the toilet. Now, when we look at August data to see a little bit of this transformation, we see what the sales data has done from August to now. We'll see that Ventura County is down 23.13%, Los Angeles 24.42%, and Orange County down 24.34% in sales volume. Now, you could see the links to these spreadsheets down below, right under the link to the real estate investing course, which you should definitely check out before November 1st because the price will be going up slightly. Note that most news organizations are still reporting data to you from August. That's kind of sad. But now when we talk about volume, it's very important to consider, what does volume mean? I mean, after all, at the end of the summer selling season, which is pretty much what August represents, all those June and July sales generally close in August, and then we typically have a drop-off in sales volume because the school year just started, and generally people trade houses less often. So this is very true, and that's why we're going to get into some very, very important numbers starting right now. And this is where things get intense. This is where things kind of freak me out a little bit.
Ha! I knew I'd be right. Dumb.
October 2017 to October 2018. That's a year-over-year change in what sales prices did. 7.89% in Ventura County, 6.03% in Los Angeles County, and 4.72% in Orange County.
Huh?
That's right, we saw increases of almost 8% in year-over-year prices in Ventura County, despite the turmoil that happened this summer. Increases of over 6% in Los Angeles County, despite this summer again, and increases of 4.72% despite the drama this summer.
No. Prices are going to fall. We're in a bubble.
There are a lot of stories talking to us about how there are so many price reductions happening right now, but that's because of our fall from a summer peak.
Uh-oh.
Each county pretty much broke their previous sale records this summer, right around the time frame of approximately April to May. We broke records across the board in all 3 of these counties. Now, of course, October of last year was probably somewhere around here. And now certainly we have seen prices decline. This is the inflection point that I've always talked about, the inflection point here, which I referenced to you, and you could look at my channel history in July. I told you we're at an inflection point. Prices are falling, and that's exactly what we saw. We saw prices decline, some places 7 to 10%, which is right along the expectation that I had set. But when we compare August to now, the rate at which prices are falling has either dramatically slowed or prices have started increasing again. That's because when we compare August to now, we're looking at increases in prices of about 3.3% in Ventura County. So appreciation from that bottom that we saw. Now, Los Angeles and Orange County are still slightly down from August. They're down 2.38% and 1.55% respectively. But the longer trend, the year-over-year trend, is up. Now, that slope might not be as desirable as what we've been used to, but the trajectory still appears to be up at this point. This doesn't mean it's going to continue forever, but at least at this point, we're seeing an upwards trajectory in real estate pricing based on the October sales data. Yet, what are news articles picking up on right now, which are really painting a negative picture for real estate? This decline, not the upswing that we're actually seeing, which is substantiated by the year-over-year data and our summer to now data, which is suggesting that maybe this summer was just a big correction in response to the Trump taxes reducing purchasing power in SALT states like New York and California by 17%, or the hike in interest rates reducing purchasing power between 8 to 12%, thanks to that spike we've noticed over the last year.
Bubble!
Well, as far as being in a bubble, the data just doesn't substantiate that. The percentage of households' income that's going to pay off debt is at a dramatic low. Defaults on mortgages is at a dramatic low. And loan standards are at an all-time high. Now, yeah, it's true. Markets do go up and down. But what signifies a bubble, which is generally that excessive run-up, or that really adverse reaction where we have an excessive down run in the economy, the reverse of a bubble, sort of the inversion of a bubble. What precedes that is usually what we're not seeing right now. That's like saying what comes before the bubble, what we usually see happen right before a bubble, is not present right now. Here's what we usually see before a bubble. We usually see a dramatic loosening in credit standards. That means it's easier to get debt, while at the same time, we see the percentage of what households are spending to service their debt, that is pay their debt off, go through the roof. So that is easier lending means more people are spending more of their money on debt. But right now we have exactly the opposite. We have tighter lending and people spending less of their money on debt, even as overall debt does go up. We're still seeing stronger debt standards, lower percentage of monthly income going to debt. And now for this one, I have to thank a lot of you folks in the YouTube comments. And you. Something very important that precedes bubbles is euphoria. And there are just way too many of us on the sidelines right now not euphoric about the market. That's actually a sign of a very healthy and balanced economy. When we have 50 to 60% of people on one side and 50 to 40% of people on the other side, and we have this little sort of teeter back and forth, 60-40, 40-60, whatever, we tend to see a balanced market. So perhaps the data will end up proving that we just hit a little bit of a big adjustment this summer. It'll be very interesting to see how sales data pans out for November and December, especially as we expect another interest rate increase in December and then another interest rate increase in March. But as always, make sure you prepare for the worst case scenarios. Focus on long-term fixed rate debt, that 30-year mortgage, stay away from variable debt, and pay off any kind of high interest debt that you have. Student loans, credit cards, pay them off. Thanks for watching.
Dude.